Let's speak in the meantime to Dr. Margo Thorning, who is Chief Economist with the American Council for Capital Formation. Margo Thorning, thanks very much for joining us. A little earlier on, Senator Harry Reid said inaction is not an option. Do you share that view?
Yes, I do. I think it's important not to let the perfect be the enemy of the good here. And I think the American public, and in fact markets around the world, are waiting for a signal that we are going to step in and do something to restore confidence to the financial markets, as well as provide more help for the homeowners. And of course, it was the housing crisis that started this whole thing. And so I think anything we can do there is certainly merited and warranted.
And you feel that this bill, in its present form, will do as you say?
Well, the bill is not perfect, but it's probably, and it may, if it passes the Senate tonight, which I suspect it will, it may well be modified again in the House. And that's certainly something that I think policymakers would be open to. But we need to get something going, if not today or tomorrow. We need to get something enacted probably by next week, because credit markets are beginning to stiffen up and freeze up. That's going to have a ripple effect through the American economy as small business and people can't get the credit they need to keep their employees and keep their businesses going. So we do need to pass something that will restore confidence.
Now, does this mean that America will avoid a recession?
It's possible. Growth has slowed, but it may not be negative for the third quarter. And of course, the technical definition is 2 quarters of negative GDP growth. We may avoid a recession. The past quarter was an increase in GDP of 2.3%. Of course, that was largely propelled by our strong exports. That's probably going to slow as countries around the world also slow. But I have some hope that we can avoid an outright recession, especially if we go ahead and pass a bill in the next week.
Welcome again, Dr. Thorning. You've been watching the events unfold in the Senate. What have you made of it so far?
Well, I made that common sense has prevailed. I really think it was important that the Senate pass a bill. It may not be a perfect bill, but it is a very positive step, and I think it'll have a positive impact on what the House decides to do, either this week or next week. So I feel reasonably confident that this will give more impetus and possibly result in a positive vote from the House.
You say it is not a perfect bill. In your eyes, what could make it perfect?
Well, one of the objections that many folks have had to this bill is that the government will have the ability to arbitrarily rewrite contracts between buyers and sellers and between homeowners and banks and so forth. And the sanctity of the contract is one of the pillars of Anglo-Saxon legal system, and so it does cause concern when the government is allowed to abrogate contracts. That will probably raise the interest rate that regular people who are perfectly creditworthy have to pay in the future for home mortgages. It will add uncertainty. It adds to a risk premium. So that's a bit of a negative. So there are some things that perhaps are not perfect, but on the other hand, I think it's important that we do pass something, and we have to take the bill as it is, and whatever the politicians have had to put together, make sausage, so to speak, to get a bill that most people will vote for. I think we just have to live with it.
Yeah, I mean, did you accept the premise that this had to be done? I mean, this really was the only option?
Well, I think it was important to pass some type relief bill because credit is frozen. Homeowners, there are many homeowners who are in danger of being foreclosed on, perhaps through no fault of their own. One of the things that could have made this a better bill was to have more provision to make low-cost loans to homeowners who still have positive equity in their house and are still above water, meaning that they don't, that the house is worth as much as the mortgage is. So if we could make loans to these homeowners to pay down the value of their mortgage just to make sure they stay above water, that would be a very positive thing. And I don't know whether there will be more funds available than are currently in the bill for that type of activity. But our central problem is the housing crisis, and that's what's caused the financial crisis. So if we can do a bit more to try to stabilize housing prices and keep existing homeowners in their homes, that would be a very positive step. So, as I say, the bill isn't perfect, but we need to send a signal to the credit markets here and around the world that we're not just going to let our economy spiral downwards. So I think it was an important vote.
Yeah, in its present form, I mean, you were talking about house prices, liquidity, the availability of mortgages. I mean, how does this bill in its present form help Main Street?
Well, there are, of course, the provisions that the Senate added, for example, to expand the FDIC guarantee up to $250,000 from $100,000. That's a big help. Also, the $40 billion or so in incentives for the business community and for individuals will also help Main Street. Another very key thing that will help Main Street is the $67 billion that would go toward preventing middle-income taxpayers from being hit by higher income taxes. We have something called the alternative minimum tax in the U.S. that every year has been snaring more and more taxpayers. So it's important not to raise taxes on people right now, and had the Senate not included that provision to keep more middle-class people from being hit by the AMT, tax rates would have risen, and of course that means the higher your tax, the less you have to spend, the more drag on consumer spending. So that AMT relief piece is an important thing right now, and so I think there are some good provisions that the Senate has added.
So-called blue dog Democrats and conservative Republicans are still going to have their reservations about this, aren't they? I mean, this still has another hurdle. Yes. It has to get through the House of Representatives, which turned it down very emphatically on Monday night.
That's true, but with the incentives that have been added to try to bring in, both liberals and conservatives, and with the turning of the tide, I think American public opinion has begun to reflect the fact that that the current economic crisis is not just impacting wealthy investment banking houses. It's beginning to impact people around the country. For example, many localities that are trying to finance expenditures for infrastructure have suddenly found that they don't have access to credit. Even, many plans that have been in the works for some time. So it's stopping municipalities from carrying out their needed expenditures and responsibilities. So credit, and these are generally considered very credit-worthy, and they're paying higher interest rates when they can get the money, and of course that means higher bills for taxpayers to pay the higher interest. So it's very important that we begin to give confidence to the banks and mortgage lenders that the economy is going to get better, and that
we've seen quite
improvements are.
Yeah, sorry to interrupt you. We've seen such an extraordinary roller coaster ride on the markets in recent days and weeks. I mean, is that going to change because of this bill if it does make it through the House of Representatives as well?
I think it will provide a measure of stability, yes, because Wall Street reacted very negatively to the failure of the bill on Monday, down almost 800 points. I think if a bill does make it through the House in the next few days, that will reassure investors. It will help stabilize the value of equities. So I expect it would have a positive impact, along with the freeing up and unfreezing of our credit markets.
And just to point out, Dr. Thorning, if you will, I mean, the impact that this is going to have on the budget plans for the next administration. I mean, it's not going to be an easy time for the next incumbent of the White House, is it?
No, it's going to be a very tough time, and it will certainly curtail their ability to undertake new types of expenditures. They will have to try to keep the economy growing, try to resume our normal 3 to 3.5% a year annual increase in GDP. I think they will be cautious about undertaking any large new expenditures because they will be fearful of what that might do to, to planned business expansion, what it might mean for tax increases, and what it might mean for the deficit. We're going to have a significant increase in the federal deficit as a percent of GDP. That, of course, means more dollars have to go out to pay the interest on the debt. So whoever the new president is certainly going to find his options constrained compared to what they might have been 6 months ago.
Okay, very interesting time. Dr. Margo Thorning from the American Council for Capital Formation, it has been a pleasure to talk to you. Thanks very much for your time on the programme.